Mess with fire, now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in. Each and every day we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. Look at this. It's kind of amazing how this candle closed off the pitch fan. We got rejected right off that 618 with the rejection wick. Came up to that 0.65 region and came back down, and that's just what we've been doing. We've been saying this for the last, I don't know, 9 days, that we're just in this like regression trend up within the 0.65 and the 618 as a distribution pattern. Are we creating a Bart Simpson down to recover this wick at the bare minimum or not? Coming down to the 0.5 would be an equilibrium play down here at 28,728, which would also be a dynamic support and resistance level of the daily time frame. If we go back to here, we can see those levels confirmed off these wicks here, and also these support lines here, and also back here from 2020. over here. So these are some old support lines. These are the only ones that I put on my chart. I don't like to clutter them up with too many horizontal lines. But if we break down out of here, then that is where we could go if we fail this 657 region. And let's go take a look at high block capital. What is high block? Well, this is when people lock their liquidity in the charts to get burnt to a crisp by the market maker for not using a stop loss. And we're going to see where all those crispy characters got burnt to a crisp a moment ago. I'm sorry, it's just crazy. So in case you weren't aware, it is liquidity versus liquidity provider. This game is a ruthless one, and they don't care which side they grab, and they will take the shorts just to induce the longs and to eat those longs and then go even lower while these shorts open and get percolated for a 32k move because they don't pay themselves. And I'm sorry, it's just hilarious to me.
Fatality.
And yeah, that's what happens. And so now you were imbalanced to shorts, imbalanced to longs, and now you're imbalanced to shorts again. But you're getting some inducement on both sides here. Let's go see who's being induced into the charts as we speak. They came back into this 100 million pool of these late shorters at 94 million. You don't want to short into red candles. This is what happens. You get those V-shaped gobbledygooks of the other players getting absorbing the early shorters cash out on your dime, basically. And if we look out below, there is some liquidity that is stacked up nicely down here in terms of longs, but coming back and retracing just a little bit into these shorts is now seeming to be the play. There is an awfully thick band starting to form and these waves to the downside. Let's see if the end is in sight, or do we go and recover that wick on. We'll do the higher time frames as we go into this. I just want to get into the price action as soon as possible, and then we'll go into the higher time frame pools. So we're going to throw on our oscillators. Boom, boom. We talked about this daily cross down event, and what did we tell you? We told you to be aware of it. Even though they did come up to this new high at 31,496, it was short-lived, and this baseline had you at hello from 5 days ago. Actually, momentummaster.info, link in the description for more, and you can scroll down to the features and toggle each of these components or the indicators to see what it looks like, or read about what's going on here. You can see what are the baselines, because that's what we had you at hello here on when the prices were closing beneath the baselines here. This cross down event was insinuating a downside play, and we talked about coming down to this 29.6 pool and possibly recovering the wick completely at 29.5. So are we going to see that happen? I don't know, but with the wickage that ensued here insinuates we could go lower. Now there is some BlackRock news about the ETF and being the future of finance, yada yada yada, but just think about when there's bullish news, what happens. Generally when there's bullish news, they dump it. They did that with El Salvador adopting it as a currency. They used those news plays as catalysts to FOMO in the retailers as they fill their shorts. So if anything, BlackRock filled their shorts up here and are trying to get a better price to buy down here or something. So with that in mind, let's go into the liquidity. It does look like a retrace on the shorts could be in order, although these bubbles are slightly small as the shorts have been rocked and they are quite getting the jitters, as are the longs, because this manipulation is real. Let's go to the higher time frame pools, shall we? Shout out to everyone here on the live. So if we go to the 7-day, they did it again. They came up into the shorts and went down into the longs, and so now we are seeing the thickest band retrieved. So are they going to meander around here at 30k? They could chill out for a hot minute on the 7-day time frame. If we go to the monthly time frame, They managed to grab the 21 billion up at 31.6 and the 15 billion at 31.5, so they grabbed a whole $36 billion off those wicks there, and then decided to come back down into this liquidity. Are we done with this pool? Let's take a look below and see what we have to offer. 4 billion at 29.8, 2 billion at 29.7, 5 at 29.6, 4 billion 29.5, and a double-digit pool at 29.4 and 29.3. So if we are going to go lower, I suggest that we wick into these guys to recover the wick completely and then some, and start to clear this lows that have been accumulating, the longs that have been accumulating since June 30th. And if we look at this just on the whole of the monthly time frame, there is an imbalance in this entire range coming down to here, with the thickest band down here, insinuating a Bart Simpson could be on the books. We did put out the idea of a Bart Simpson to be aware of. And if you look at the 3-month time frame, this starts to become ever more real when you start to see these double digits of pools below getting yellow. Although you do have this double digits above paving the way up to 33K. I'd like to see some divergence spawn for real before we come back down into that, so we could sweep the lows to 29 even, or 28, yeah, 29 even or so, and then spawn some divergence to go take out some of the highs before that occurs. But I'm open to anything. If we look at the 33 region, you do see these 100 billion up at 32.1, and beyond, approaching that as well, up to 33.6. You get near 90 billion per price range here. You do have a larger amount down below to be aware of, but nothing in between to, well, not nothing, but 23 billion by comparison is relatively nothing in those terms. If we go to the 2-year time frame, you got the thickest band of $200 billion down at 24.4, but you have 450 billion up in the 33.2 region, which is why we expect to come down and take out some of these pools beneath the wick here, and 41 billion at 29.2, 31 billion 28.8. It would be nice if those got taken out completely. You spawn some bullish divergence, boom, you go up to here, grab the 33.2, come back down to here. So you go down and up and then down again. Would be what I would do if I were a market maker looking at the external liquidity range. Let's go into the charts and look at the momentum, shall we? So on the weekly time frame, we did reclaim the adaptive moving average, so you could come all the way down to the 29.382 and close a weekly candle above that and still be bullish, as a reclamation of the trend adaptive moving average. You can look it up. It's done by Mr. Kaufman. The levels that we have here are back tested by yours truly, but I did not invent that moving average. It takes out the noise while remaining stable. So it's sticky yet removes the noise. So it's the trend adaptive. So you'll find this to be very sticky on multiple time frames and back tested to be true. All right, so on the weekly time frame, we are getting this coming up to the 50 level, where it could reject and come down again, or it could break out here and hold. It's basically at an ambiguous level on the weekly. We previously had a 5-day candle close 2 days ago with a spinning top above the baselines here, suggesting that if we close a candle with the baselines beneath the price, that we could see a cross-up event up into the 32.888 region in the next 3 days. Look out for that on the 5-day. On the 3-day, we had a spinning top for the last 9 days above the baselines here. Are we getting a third one in the next 2 days alongside the 5-day? We will see. Cloud is tapering on the 3-day as well, suggesting we need to get some sort of insertion of volume, or this could start to spell a downside shift and that Bart Simpson idea to become real. If we go to the daily time frame, daily time frame has nearly reset the stochastic RSI completely to the value of 5. The RSI and the money flow are coming back to the 50 level. You could get a bounce off the 50 or go slightly beneath it and come back. The Williams is now getting to that overbought status where it will give you the alarm if it does start to come down here, although the stochastic has reset in a nice manner while going sideways, which is ultimately bullish in my mind. What do I mean by that? Well, you have price action going sideways here. All the stochastic RSI resets, so that does insinuate getting oversold without actually moving anywhere, so that shows a sign of strength. There have been times where that's been a fake out before. We can go back to that for you. Last May was one over here, or April. It was April Fool's, an entire month of downside. So we can go back to you here, look at reset, and then you had the Williams alarms go off, and then it proceeded to dump on you. And all the lower time frames did have also a reset here. So you had the cross down event. This is before I used those helixes, so it's interesting to go back in time. But I remember very clearly the 12-hour and the 4-hour and the 6-hour. All these were oversold. 6-hour oversold. Well, this one kind of brought back up at the 4-hour, and then I remember it just proceeded to dump for a month, and that was the Luna liquidation event for a month. So if they decide to price it down, then that's what happens basically. Let's go to the 4-hour. And so it just didn't ever take off. It just got pressed to the downside for a month, and we saw the rocket ship take off by 1%. And we were getting rocket ships play out slightly, but then getting suppressed. And that was where you had your Luna liquidation, where it should have bounced, but there was manipulation to depeg the coin and all that fun stuff. All right, so yeah, if you see, where was I? So we were talking about the daily time frame. So the daily time frame stochastic RSI reset, but the Williams is high. So if you get that alarming event, then you could see this suppression occur. It's just something to note. You do have the cross down event now in play on the daily time frame. The last time we saw that was here, and we did see 4 or 5 days of downside. So we have so far have seen 3 with the preemption of that daily cross down event. Shout out to Momentum Master users out there. If we go to the 12-hour time frame, we start to actually the 22. So the 22 is going to start showing this cloud here, and we are trying to hold off it. We have the Williams starting to come down to suppress this. We had some previous bearish divergence on the RSI and money flow, which is starting to play out here on the 22-hour time frame. If you go to the 12-hour time frame, we're starting to see this money flow coming back above the RSI, which was previously showing that bullish divergence, which shot us to the upside the first time off this buyback wick on the candle. So the recovery of this wick, are we going to back for this wick? We keep pushing to this 30,000 level. Let's just see what type of liquidity is getting pinged in with each time we push back down, because if more shorts, and particularly 100x revenge trading shorts open, then that's when they start to just bounce back in a V shape to grab them. We saw that back here, just to note. Oh, it's already lost to Father Time, how sad. But yeah, we had it back there at one point where they V-shaped back into 300 million in short liquidity. So this also pinged in those. So look at this. So, and this, as we were breaking out, as we broke up into this 31.5 region, these guys opened $200 million long trades into the breakout. And so they just said, okay, zip, grab all the 100x gone. They let them DCA to give them more money, and they said, oh, thanks for the more money, and they went and grabbed the 50x, and then they went down to grab the 25x. Meanwhile, the shorts were opening up in a fury now too. So you have to cover your shorts on the other side of the equation. So these guys closing out their big pools start capsizing these smaller ones that opened later down here. So these guys that opened the 94 million short that will buy at this level down here, the shorts closing out say, sure thing, boss. Rip. And that's cannibalization of the shorts by shorts that opened at the proper resistance level up above. And so you can have shorts that cannibalize these late shorters, and that's what they're doing, coming back into these 100x, because who wants to pay 100 times the money they put up here? So who wants to pay 100 times 94 million? Not me, which is why they V-shaped. So if you think like a market maker, that you start to see where these pools they like to gravitate back to occur. Not so many longs being induced here too, so we could stabilize at this level for the interim unless they have an external target they're aiming at. So here is the 114 million that opened up here, and then they just came back and then they reverse off it. They create that divergence off the absorption of that level. All right, so looking at the 12-hour time frame, are we getting this? We're getting this ambiguousness as the money flow comes back to the RSI. The leading MACD is crossed down currently, so we could be coming down lower. I did say until we get to this level at the 29.6 region, it's not really a double bottom that I'm willing to take, because that wick has yet to be recovered. So we'd like to see the recovery of the wick. And if we go to the 6-hour time frame, we also have PVSRA. We have a vector candle with a stop hunt rise drop. As I said before, they like to go up to go down. They like to go down to go up. So these type of plays insinuate where it's going to go thereafter, especially if it's a sharp reversal. So this was a sharp reversal and they went up. So this was a sharp reversal and they should go down. And so this is coming down on the 6-hour time frame. You're getting the RSI beneath the 50 level here, starting to come down nicely. 4-hour time frame attempted to take off and then faked out and could be coming down here with the suppression of that higher time frame and the baselines on the daily. If you look at the hourly, we are getting reset on the Williams here. So this is where patience is key, waiting for the Williams to get into that fertile crescent with the rising sun potential, with the baselines beneath the price. When you get the baselines beneath the price in this manner, similar to here, and you get the cross-up event, boom, you can see the upside. We were talking about how we were at work. Like, we put out the idea of going lower preemptively last night when we streamed in the middle of the night. And then we had to work early in the morning all day, so we couldn't put this out to you. But if you had Momentum Master, you could be your own guru and see this cross-up event occur into the night and see that it's holding and the candles close above it, and could have taken the long to the upside. Yeah, so the cross-down events, basically when they're in play, they're in play until the baselines get beneath the price and the price action closes above it. And it's all fractal in nature, so you can see these events occur on these lower time frames, so you can see the beginnings of that potential, however weak, on the 15-minute. But it has to start somewhere, and that's where that starts to occur. So yesterday we were talking about how that came back into a 618 bounce potential here off of this pocket, the golden pocket here, and then you had this bounce and you were kind of gone when you reclaimed this cloud here on the 15-minute here, this thinning of the cloud. And this is the baby dragon that we see in my preloading screen. This is your double bottom, your shoulder, head and shoulder kind of out of here. They did some games thereafter, came back down into this golden pocket here, and they wicked into this one, and then they were gone. So that's what you would be seeing on these other time frames. We are oversold on the getting oversold on the 15-minute and getting the double bottom on the 15-minute play. So are you going to see a bounce up into the short liquidity, particularly the 100xers of shorts that open late, upwards in the region of 30,003 to before, you could be seeing this retracement up into this 30,365 region of the 94,050,000x character up here, and his 100x comrades down below here. There's not that many longs being opened up here except for this character down at 29.95. That is, unless they're starting to target this thicker band that is down here at the 29.78 region and ignore these guys for the interim. All right, but this is why you wait for the double bottom idea. The double bottom is your thing, but coinciding it with a higher time frame point of interest and having that patience is really nice. So here was a wick that was recovered. They didn't fully recover it here with this drop to the downside, so that they didn't recover this wick 100%, but with that recovery they did bring it out of here. So seeing the recovery of the wick, even if, however slight, even if it comes down to 29.643, I will be happy with that idea if I can see some divergence and see it hold this range. If it does not, then you have your daily support range down here in the 28.690 range, and it will knock out these characters who entered long here. All right, so on the 4-hour time frame, where do we stand here? 4-hour closes in 44 minutes. When this 44-minute close of the 4-hour closes in this bearish engulfing in this manner with the PVSRA, it's going to trigger some algos to do a few things. It might trigger some algos to sell off their position in a state of fear to bring us the other extra the way down to here, or it could trigger the retrace to start to play out the lower time frames of the 15-minute to come back up into this 100x pool. And so this is where you would start to build a narrative structure, if you were so inclined, on the 15-minute and below, looking for those divergence plays. So I'm not seeing any divergence, so I'm not seeing any interest for myself personally, but seeing this baseline come beneath the price is what you want to see when you start to build that idea. And seeing 5 time frames oversold with the 32 indicators it's monitoring on the stochastic array is what also gives you pause. So getting those 5 with the X's and the diamonds and the circles all combined is a good idea. Ideally, you want that hot 6 level is good. We had a 6 back here. This 6 had you at hello on the 15-minute, and then we were gone. So getting that 6 down here, 6 and 6, the sweet 6s, is a really good number for those probabilities to play out. All right, we're gonna just do a quick update here, but we are at midweek reversal, which is midweek reversal on Thursday. Currently, you're seeing the 5-minute time frame play out. It looks like we're going to get a retrace into the liquidity of the 100xers while they try to ping in some more longs. So coming up to the 30,365 region of the 50x pool, 30,365 would have you just below the bearish ATR region here of the super trend. Right there, just below the super trend. So even if you don't know liquidity at all, the Momentum Master has these levels of the super trend which are back tested to be true. When we wick up to them and fade, then we tend to fall back down. So if we wick up to this and fade, then we could come back down. But ideally coming back to grab this fair value gap over here as well, which also happens to coincide with that pool of 94 million in shorts on 100x, 50x, and their comrade in arms could be the play right now. There's more broth to the downside, and they could go sideways while they induce more liquidity. So you could see this surge up, and it creates the first leg of a double bottom, and then they come down, find some divergence, and come out of there. Where does it go? I don't know. Does it go sideways? Do we get rejected? Do we come up and V-shaped even harder like yesterday? Like we did here? This is what you look for, those double bottoms. And then if we retrace back down, do you retrace into a pocket. Like if it goes up to there, do you retrace down into the 618? Why did I know that that would be the 618 from here? It's just do it enough times, you start to see these, you notice the angles. And that's why I draw the angles that happen to play out sometimes. It's not really pattern trading, it's inducement. Patterns are tertiary to the liquidity. If you study the liquidity and know what the traps are, you don't need the patterns. The patterns are the tertiary aspect of the liquidity and what the liquidity is doing by being induced into the charts. And then by the over leverage, it causes it to bounce up and come down and create these double bottoms by taking out the 100x and then inducing more longs. If you're looking for a free thing that you don't have high block for, you can use the liquidation levels by ML applications. It's this one here. I suggest setting your threshold to 0.1 to show every 100k trader, and you can start to see where the pools percolate before most people. And you can zoom in and see what amount. There's a $10 million short that opened up here on this candle that is currently in drawdown that they could come back to here, which I highly think they will, at least retracing up to that pool in some way, shape, or form. So even if you don't have high block, I was using this before I had high block as the poor man's version, so this is useful nonetheless. When you start to see more bubbles on one side over the other and the values are higher than the other side, then it could insinuate an upside or downside play. So if you go back to here, we had an awfully large amount of 100x after the surge up, so they came back into the 100x. Is it really manipulation though? Like, they don't really want to pay those guys, so a natural absorption of their liquidity is, you know, what would you do if you were caught between a rock and a hard place, paying 100x shorts and 100x longs? You'd grab them both. And so, you know, you pay to play, and if you don't know how to pay yourself as you're playing, then you pay them. So on that note, it looks like they're going to retrace back into the shorts a little bit, and particularly how high did they go up to 30,645 and grab this 100x pool and clear this entire 100x band here. There is that idea of 10 billion imbalance to shorts right now. We'll take a question from the audience and then bid you adieu. We're basically enjoying tomorrow's Run for Profit Friday. We're seeing this 15-minute narrative possibly cross up here and then give us that bounce and see where it's going to lead. So if you did see a nice playoff here, consider paying yourself. It is a good level to think about, and then maybe you can re-enter if it creates a bear flag. All right, so we got about there'll be like another reaction most likely at this time in 3 hours time, and we'll see. Let's say what's up. 𝗏𝗲𝗶𝗀, what's going on? 5 concurrent viewers, thanks for stopping in. So yeah, we're watching for this cross up event to occur. If it does cross up on the 15 here, and you do see the rising sun play out of this tidal basin of the valleys here in the mountains here of the Williams, you do have the MACD also coming down to the domain of the Williams that could be coming up here, and you have the money flow and the RSI starting to come up with the stochastic RSI, so you could get a 15-minute scalp. How high does it take you is up to you and how you set your stop loss into profit, but it's all on you. This is a 5-minute play, 5 to the 15. You can go to these lower time frames, take a look. You have a lot of resistance on the cloud here, potentially speaking. We're not going to put that fib out just yet, but basically come up to those pools, get rejected off some level, or if it's extremely V-shaped in nature, it will come up and then retest off the cloud and then continue. And so there's 2 scenarios. You have the cloud shifting like this and then creating that entry over here, or it getting rejected off the cloud and coming down, and then you get another entry potential here. So you have like 2 a ultra V-shaped bullish recovery idea that reclaims the cloud on the 15, and then you find that thinning cloud re-entry if it's super bullish, or you have that rejection come back down for a double bottom idea. I think the double bottom after something like that is more the idea to see, and just play it by ear, and then possibly look for a re-entry down here, and then that will also be your 618 of wherever you happen to go up to. Whether it's here, you'll go into that golden pocket there. So yeah, 15-minute play. And does that cascade to the hourly? 4-hour closes in 35 minutes. We're at the bottom of the Keltner channel on the hourly time frame, which is generally when you start to come back into it. Four-hour coming down into this wick would be ideal though, getting this 4-hour to close in 34 minutes bearish beneath this bullish super trend level, which has been holding quite nicely, mind you, since Saturday, June 17th. So this super trend level on the 4-hour time frame is kind of a big one to break, which we just broke. So if we close out this 4-hour candle breaking this super trend level, then that could trigger some algos that use the super trend for their take profit regions to kind of get gobbled up here. They do wick below it to take these traders out that ride this up as their trailing stop loss. There are trailing stop loss formulas. We also have one in Momentum Master A, which is more frugal, that will keep you from getting hunted on whatever time frame you're at. So you'd be able to move it just outside that range and be cool. And it tells you the price here too. So this helps you do the calculations automatically. So another feature we don't show on the website but is inbuilt, the ATR trailing stop loss. It's default set to be frugal on whatever time frame you're trading. Well, that's it for me, ladies and gents. I had a nice trading session. I only took 9 trades on my counter for the NASDAQ. 8 out of 9 were profitable, so I was good for the day. And so I decided to stream just thereafter with going on very little sleep, so I'm a little bit delirious right now. But yes, looking for the 15-minute to close, cross up and see where that takes you. Does it break the bearish super trend that's forming on the 15-minute or not? Does it clear some of these pools and vectors and start to get rejected and come back into an order block on the golden pocket, or come lower into recovery of the wick? It's all these if-then statements, and what you're seeing at the time, I can only show you what's happening in the moment right now. It's up to you to monitor it thereafter. Similar to this cloud thinning and continuation idea, which was as I was sleeping, 5:15 in the morning. So this is why the indicator can be your guide. You don't need a human being to guide the path. You just need to be able to see between the cracks in the mirror of price action, which is reflecting momentum and liquidity. And that's all she wrote, folks. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share, an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, and all that fun stuff, and we will catch you on the flip side.